Yo guys, just gonna welcome back to another weekly forecast, and it's been a while again. Decided to take some time off. I was a bit busy with work in general, but we're back. We decided to do a quick breakdown because we had a decent pullback from Friday, with Trump, mentioning that there's going to be some heavy tariffs on China. Usual tariff business, but we were expecting some sort of pullback anyway from last week because, as you can see, from Monday onwards, if you look at the daily time frame, from here was Monday was, then we had Tuesday, Wednesday, Thursday, Friday. That was a week prior, and then again Monday, Tuesday, Wednesday, Thursday. So we had pretty much 2 clean full weeks of bullish impulses, and that did end up taking out the prior monthly high, September's high. So that all of October has taken out the prior monthly high, and then we get this big pullback back inside this range. Now, if we start with the weekly time frame, I'll just show you what the monthly cycle looks like. Now, if we look at the monthly time cycle, you can see from September's low, we have it right here. It has not been taken out. It's still got liquidity sitting below that. And you can see what price has done is it immediately, as from September, took out the August high, right? So you can mark this one. So that's the August high. So if I write August high. So a similar sort of thing happened where August high was immediately run through, and you can see with this push up, prices now obviously pull back towards it. And even with October, price immediately took out September's high. So now if we just focus on September's high and low, normally what usually would happen is that price would take out the highs and then revert back to the lows. But we have one little key fair value gap in the middle of all of this equilibrium here, which is a weekly fair value gap, as you can see here. If we get the weekly fair value gap, do we have a... Yes, we do. So we have a weekly fair value gap here, a bullish one. So as long as price on the weekly time frame stays above this weekly fair value gap, we're likely to revert back to the highs here. However, if price starts to close back below this weekly fair value gap, then I'd expect price to go back towards the prior monthly low. And the reason for this is because price has already taken out the prior monthly high. Usually what you'd get is, if I draw a line here and then draw a line here, on a specific time cycle, you either get two models that occur, right? So I'm going to draw one, then I'm going to draw the other one. Normally what would happen is that price opens, immediately pushes towards the highs or the lows, whichever one you want to do, and then does the opposite. So it immediately attacks the other side that has not been breached. So price takes at the highs and immediately attacks the lows. This occurs on pretty much almost every time cycle that you can think of, whether it's daily, weekly, monthly, yearly, even 90-minute, 10-minute, 30-minute. So it happens all the time. And you can see similar sort of thing where the price attacks the low and reverts to the high. That is one model, but you could also get a continuation model where price is very bullish, and what would happen is that price would attack the high of the previous cycle, whether it's the previous days, previous weekly cycle, previous monthly, and then it would use that as support to push higher. That is if price is very, very bullish, it starts to see that sort of happen. And you can kind of, potentially, you could see that occur with what we're seeing here with this little pullback. We could get what was that August high right here. So that if this is August high, we could see that August cycle be used as support for October going forward. But without making it too complicated, let's just keep it like this. If we just pretty much mark up the highs and the lows here, and then just get the range of the dealing range for September, you can see that the price has created that high, and we've now pulled back towards 50% here. We do have the extreme discount around 75%, so this is going to be a very key area to see if price is now going to turn around and start pushing back up. Now, as I said, as long as price on the weekly time frame does not close below the weekly fair value gap, we should still continue back up, and this is just a retracement. Now let's start dropping time frames. Now that we've established the higher time frame sort of narrative on what we're looking for, we're allowed to start dropping down on the time frames now. So if you bring this across and have a look and see where price is at. So now we've had this big drop on Friday. Now what's Monday likely to do? So now that we're on a daily sort of perspective, we can mark out the prior daily high and the prior daily low. Ideally, I will be marking out the prior weekly high and the prior weekly low. So I think the Friday candle was the whole weekly range, which is quite interesting because if you think about it, if let me get rid of these lines because there's too many now. If you think about it, this is the prime monthly high. Let's leave that there. We have the weekly low, which started here, and the weekly high, which is here. But then what happened on Friday was Friday absolutely took out that prior weekly low. So then this is the weekly range of what we just had. So if you mark out, this is what I do every time I jump on the charts. Every week I get myself ready for the new week by marking the monthly and the weekly the monthly highs and lows and the weekly highs and lows, and that gets me in sync with the market and where the market is at the moment. So if you mark out the prior weekly low and the prior weekly high, as you can see that if the market stays within this range here and we have not taken out either one of these, then we're likely to be range bound within this sort of the prior weekly candle. But what could happen is that price could give us a retracement, and then we can potentially either attack the lows first and then get ready to start attacking the highs. So it depends on how volatile the next week is. I doubt it would be, just by looking at the calendar. If you have a look, due to the government shutdown, we don't have PPI. It's tentative. Maybe we might, maybe we won't. But 520 is the main sort of news event, which is, I believe, is this the right timing? Do I have it on New York? No, I do not. 1 second, let me change this to New York time, just because I can't understand. Should be -4, right? Eastern time, there we go. 12:20. Okay, so at lunchtime on Tuesday, we would likely have Powell speaking. So that, I think Tuesday is going to be the main day for trading, just to see that volatility injection around lunchtime. So it could be a PM session trade, or it could be towards the end of the AM session where you could get that trade. So what I would ideally like to see is potentially Monday start trading and attacking that prior weekly low. This will set us up nicely for a bullish move, retracing back into this, and obviously you can see that we're already in discount of the range that we are trading in from this low to this high. So that would be key if Monday can give us that continuation here, taking out the prior weekly low, and then we like sort of invalidate, create some sort of breaker block or something where price just starts to turn around. And if I get that sort of fib back up, you'll be able to see that from this high to low, price is now obviously in that discount range to get some buys in, which will be nice and key maybe for Tuesday, and then Wednesday, Thursday maybe trade back up. Now, if what occurs going into next week is that price just keeps tanking. Obviously, I'm not saying buy immediately. I'm saying wait, because what price could do is it could just keep doing this Monday, Tuesday, Wednesday, Thursday, Friday, and it could be a bearish week, right? And then the weekly candle will close, because obviously we don't know where the weekly candle will close. However, we can anticipate what is order flow showing us on the hour time frame, on the 4 hour time frame sort of thing. So we have to wait to perhaps maybe we see something like this where price pushes down like this, and then in this area here, from there to here, I might draw it as a box actually, just to make you guys make it seem very key that you can see it. Say for example here we have a fair value gap, maybe a 1 hour fair value gap. It won't show it, will it? Let me get a bearish PD here. Bearish PD, there we go. So let's say there's a fair value gap here, right? And now this is what is guiding us to keep saying that, okay, there's going to be some potential support off this, but if price sort of closes back above this, that is an inversion, and then we can start safely assuming that, right, okay, price is rejected, it's created an inversion, we've changed structure, we are now showing some sort of bullish sort of moves, and maybe this could be right where the news hits, where Powell speaks on Tuesday or something, we get some bullish move back up. That could be a clean sort of reversal trade that you can get involved, and then obviously your aims would be the prior daily highs and the prior weekly highs and trading back above here. But again, the prior monthly low is still a key thing that you want to keep an eye on, but it depends on if this to the right doesn't happen. If whatever's on the right does not happen, then obviously we know where we're going. So this is why, you know, having this analysis early helps, because you understand the different scenarios that could be played, if this then that, potentially. So if price stays bearish and price keeps respecting bearish PD arrays, as you can see like that, this tells you that order flow is bearish. So where's it likely heading? We have the higher time frame levels marked up, like prior monthly highs and prior monthly lows. We know that if price keeps falling, it's likely going to go and attack the September lows, and then we have the August lows, which are also down here as well on the 1st of August. So you can even mark those out. If price still keeps going, we know where it's going to likely turn out. Now, once price takes those out, then we're expecting some sort of reverse, and I'm sure we'll get some sort of pullback, because I'm sure price will continue climbing as it usually does, and this is just a pullback. And what we need is just a little correction for price to continue back up. But I'm likely expecting some sort of bullish move from these areas here where price starts to pull back up. And I would like to see the weekly candle close above that box I've just drawn. So have that box drawn on your charts and monitor it this week. It's going to be very key to see where price closes. Price could close below, and then the next week could close above. So it could be a waiting game, but we'd like to see what happens on the lower time frame to give us that indication that, okay, the lower time frames are starting to flip bullish. We're likely to see the weeklies and the higher time frames follow, and then we're likely to see those expansions back towards the upside. So I'm going to have these marked on the charts. I'm going to keep these here, and this will help me throughout this week. August lows. So we'll see how that goes. So we had the September lows and then the August lows right here. So that's pretty much it on Nasdaq. I might keep it there, keep it nice and sweet, short and sweet here. If you guys are not already, the links are all in the description. If you're new here and you like the way I sort of teach, yeah, check the links in the description. I've got free channels, got VIP channels, and that's pretty much it. Yep, it's been Oasis FX. Peace out.